Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about how Bitcoin could be just days away from a breakout. Now look, we've been talking about a breakout coming to Bitcoin for the last couple of days. In fact, the last week or so, because Bitcoin's been sitting up here around $30,000. But today, we're going to talk about why that looks so very close and why I believe that breakout will likely be coming within the next month, but honestly, maybe this week. Bitcoin is very close to huge resistance, and I'm really excited to talk about that because that resistance is so important. And if Bitcoin does break above $31,000 and we see some fireworks on the 4th of July, then Bitcoin has more or less confirmed that its next bull market has begun. We've been sitting in this teeter-totter zone of are we going into a bull market, are we not, for a while now, and right now it seems like we might be on the very cusp of finally getting a confirmation that that bull market is going to start. I'm so excited for today's show. I am so pumped for this week, and I'm also so pumped to let you guys know that I'm actually not going to be here tomorrow because July 4th is coming, and I've realized something about myself. I have realized something that has to do with the principles of financial sovereignty. And I want to break that down for you right here at the beginning of the stream and just share with you some of the lessons that I'm learning in my personal life and in my family's life that I want to share with you. And then we're going to jump straight on into the technical analysis. So let's back up. You've probably heard of the Pareto principle. That is the idea of the 80-20 rule. In forests, 20% of the trees get 80% of the sunlight because they're taller. 20% of people in a career a lot of times make 80% of the money. 20% of the people in the world make 80% of the money. There's this rule in the world that 20% of such and such gets 80% of such and such else. And one of the ways that the 80-20 rule applies is that you really want to be spending probably 80% of your life working on something. That means you're working on your business, you're working on your career, you're working on your marriage, you're working on your family, you're working on your house, you're working on your future, you're working on your destiny, you're working on your life plan, you're working on your mission statement, you're working on your retirement, you're working at your church, whatever it is, you're working, right? But there's that 20% of life that I think that we regret, that we neglect. We regret because we neglect, and that's the part of life that you're supposed to enjoy. You know, God spent 6 days working on creating the heavens and the earth, and he spent the 7th day kicking it. That's about 20% of the time, about 14% of the time. He said, you know what? I'm going to relax. I'm going to enjoy the fruits of my labor, and he laid out for us the idea of the Sabbath. And so I think in our lives, there are times that we can lean too far in one or the other direction. And I'm going to tie all this into crypto. You guys know we don't just talk about crypto here. We talk about the principles of financial sovereignty that are going to help crypto to benefit you in your life. And so I think that you can lean in one of two directions. You can lean into the work side of things, and you can work 100% of the time and never take any breaks, never enjoy the fruits of your labor, never rest, and you're going to get burnt out. You're going to regret it. You see, even as Christians, we look forward to the rewards that we'll get in heaven. Philippians 3:14 says, I press on to reach the end of the race and receive the heavenly prize for which God through Christ Jesus is calling us. We are going to have prizes in heaven if we do God's will. Now, in our life, it's the same principle. There is nothing wrong with enjoying the fruits of our labor. And one of the things I'm learning about myself is that I have not done a good enough job enjoying the fruits of my labor. I have made the mistake in the last few years anyway of leaning too far in the direction of working and just working and never putting any planning and effort into the relaxation and enjoyment aspect of it. You can lean too far in the other direction. I did a lot of that while I was growing up, where you spend 80, 90, 100% of your time resting, relaxing, chilling out, and that's, gluttony and laziness, and you don't want to go in that direction either. So what I've decided is I'm going to start actually probably taking federal holidays off of coffee and crypto and actually taking some time for myself and for my family, and so we're going to be starting that tomorrow. We're going to Disney World tomorrow. I'm so pumped. So pumped. I've not been to Disney since I was like 10. So we're going to go and we're going to see the fireworks at Disney. And I'm not going to be here. And I'm really excited because I'm going to be thinking about you guys, but I'm going to be enjoying some time with my family and hopefully setting a good example for you guys, for my kids, for my wife, that it is important to spend probably about 80% of your life working on something. That might seem like a high number, but it's a pretty good number. You need to spend that 20% of your life enjoying yourself as well, or else your labor will feel like it is in vain. All right. Let's go ahead and read some chat. Really appreciate all of you tuning in. Grand Roofing Incorporated in chat as always. Today he was first. He also said, hit the thumbs up for the best crypto channel out there. I don't know about that, but I really appreciate the support on that, my friend. Thank you so much. We've got Queen, Dan Nolan, Mike Lowry, Sean O'Brien, Leroy N49, Joe Bollier, Alex Nibo, Henry T, Wreck the Bears. Let me see if I can just read all the names. There's only a few more. John Doe, Philly Skills, Gray Harrison, Cicero, Ferreira? Ferreira. I don't know. I'm sorry. Cicero. I can say Cicero because that was a politician in ancient Rome. Crypto Mini Bike in chat. Robert Kehoe, Scott PX, PVXX, PVXX, Samuel Johnson, and Grant F. What's up? As far as the Disney thing, we bought the ticket 6 months ago. That's all I'll say. Anyway, let's go ahead and jump straight on over to CoinMarketCap. Bitcoin is currently trading at $30,700. It is up 0.57% over the last 24 hours. Ethereum doing very well. It's sitting at almost $2,000, up 2.55% over the last 24 hours. Bitcoin's trading sideways over the last 7 days. Ethereum pretty much doing the same thing, but it does have a little bit of an uptick over the last 24 hours or so. So that's kind of skewing that 7-day price change to the upside. Last 90 days, Bitcoin and Ethereum are up, but they are largely sideways year to date. They're both up exponentially. Now, an interesting thing has occurred over the weekend. And interestingly enough, Bitcoin has actually lost a considerable amount of market dominance, about 1%. As you can see, ever since the 29th, Bitcoin's market dominance has dropped from 50.43% down to 49.26%. Now, if we look at the difference here, we can see that Ethereum was sitting at 19% and others were sitting at 16%. Others jumped by about 0.5%, and Ethereum actually jumped as well. So what we've seen happen here is very, very, very good news for the Bitcoin market. What we've seen is that Bitcoin has gone on an initial major run on Bitcoin market dominance, indicating that it's kind of doing that tsunami effect that we talked about, where it sucks all the life out of all the water out of the bay that's about to get pummeled. It sucks all the oxygen out of the room in the example of a fire in a closed building to build itself stronger. And then there's a boom, there's an explosion. There's an explosion with the fire. There's a tsunami that comes in and completely inundates the coast. Bitcoin right now is showing us that it has kind of sucked all the value out of the altcoins, gathered it all to itself, and now that it has grown exponentially, its cup is overflowing and is sharing the wealth back out. And it has led to this altcoin engine. I've spoken about this for the last probably 4 years. There's a concept that I like to talk about called the altcoin engine. You have this cycle where, as if you had a 2-piston engine, you have one piston that's up while the other's down, and then they switch. And what we're seeing right now is that Bitcoin went through a major rally, trading sideways. A lot of that extra energy that was bleeding over is going into the altcoins. The altcoins are coming up, leading Bitcoin market dominance to come down, not because Bitcoin's losing value, but because the altcoins are gaining value while Bitcoin's trading sideways. And you're seeing the altcoin engine go where the Bitcoin market's driving things. It's the first piston that fires, the first cylinder that fires, and then you have this altcoin coming up, this altcoin rally coming up over the last few days, and then they're going to switch, and they're going to go back and forth, and this is kind of the beginning stages of a bull market. It's the beginning stages of a car running. You turn a car on, one cylinder is the one that starts all of it. You have, boom, one of the cylinders to however the specific internal combustion engine operates. At some point, one of the pistons, or two, however it works, depending on the car and depending on the engine, has to fire to start the actual vehicle, right? Similarly here, Bitcoin is almost always that ignition stroke, if you will. And so Bitcoin's taken its ignition stroke where it's gone through that first cycle. It's gone through a big movement. And so now it's letting the altcoins catch up. And the reason that's so important is because that's typically how we see bull markets form. Right now, Bitcoin is trading right below $31,000, and it's been sitting right up here, smacking its head on this resistance over and over and over again. The farthest that Bitcoin has gotten away from this resistance level was $1,300, about 4.5%. In general, the farthest Bitcoin's really gotten away has been within a $1,000 range. The resistance is more or less at $31,000. Bitcoin has only barely dropped below $30,000 just a couple of times. $30,000 is being turned into very strong support. And why that's important is because Bitcoin very, very easily could break $31,000 with the amount of pressure that is putting on this level. Bitcoin stayed between this zone, between $30,000 and $31,000 back here in April, the first time we got up here during the new bull market, for about 8 days. And we spent most of our time towards the $30,000 part of that, and we only hit $31,000 one time. Bitcoin in this case, has sat up here for 12 days, 50% longer, and Bitcoin has spent over half of its time above this center line at about 30,500, and it's hit its head on $31,000 once, twice, 3 times, 4 times, nearly a 5th time overnight. Bitcoin is showing that it has far more strength at this level than it did last time, indicating that this level is almost certainly, disregarding any other huge fundamental factor that could happen without that we might not see coming, any black swan events, Bitcoin very likely will end up breaking $31,000. But there's plenty of extra reason to believe that that's going to happen, not just having to do with what we're seeing down on the 4-hourly chart. One of the things I want you guys to keep an eye on is the fact that RSI is sitting up here at 66. Now, you might see RSI and you may see MACD and say, man, but Jab, they're about to cross bearish. Oh my goodness, what's going on? This is not necessarily a bad thing. If Bitcoin's MACD does cross bearish and if RSI does drop below its 14 interval moving average, it's not because Bitcoin's moving down. Bitcoin has had 5 green days in a row. They've been very small candlesticks, but they have technically been green candlesticks. Saw a huge spinning top. Bitcoin did not correct. Notice that. The spinning top did not send Bitcoin to the downside as we warned it might on Friday. We talked about that on stream. Bitcoin has actually continued pushing to the upside. That means that this bearish MACD cross, that probably will happen at this point, and this RSI cross below the 14 interval moving average they're not the end of the world. They're just something akin to this. You can see when Bitcoin came up to this level, we did have a bearish MACD cross. Bitcoin traded sideways. It was actually going up. It was trending upwards while MACD was trending downwards. This is a bit of a reset. MACD crossing bearish here does not indicate that we've lost the initiative. It's indicating that Bitcoin's intensity has slowed down to a light jog. You know, Bitcoin was running at 15 miles an hour here and it got winded, and now Bitcoin, it didn't completely stop and start going to the downside because it went down to 0. Now Bitcoin's running at like 6-7 miles an hour just to kind of recuperate its energy. In a little while, we'll see this cross bearish, probably about 2 to 3 days from now. And then potentially within a week to 2 weeks, we see another bullish cross as a result of Bitcoin moving to the upside. RSI and MACD may look discouraging right now. I would not read them that way at all. I would read them to indicate that Bitcoin is taking a breather, but that's not taking a breather that is likely to lead it to a major correction. Just remember, guys, we had 1, 2, 3 legs of this rally. We had 1, 2 legs of this rally. It would be a little bit strange if we only saw 1 leg of this rally, especially with how much exuberance we're seeing up here at these levels. Furthermore, if we look at Lux Algo, we've spoken about this before, but don't forget Lux Algo. This is an incredible technical indicator. I cannot shout its praise loudly enough from the rooftops. We have seen Lux Algo's buy signal come in here on the 20th of June, 2023. With the major rally that we witnessed. We also saw trend catcher turn green, which means we are under a confirmed buy signal on Lux Algo. That buy signal has a center line take profit at $32,500, which is why I've placed my price target for this rally that we're in right now between $32,000 and $33,000. I think Lux Algo will be vindicated here. And in case you would like to know why I believe that, we can simply look at the historicity. The last couple of confirmed buy signals I will show here on the chart for you. They are very, very, very powerful signals. I'll just show you some of these. Look at these buy signals right here. And I'm not going to include these over here because these were invalidated for a couple of reasons, but every single one of them was still profitable. They were just lightly profitable because we were in a bear market, I'm sorry. Right here with this buy signal on the daily chart, Bitcoin rallied 56%. This buy signal, after it was confirmed, Bitcoin rallied 56% again. The next buy signal that I'm really going to count, these buy signals are in profit by a couple of percentage points. I would have weeded them out for various reasons I'm not going to get into right now because you don't just want to follow the buy and sell signals, but even if you did, you'd probably be in pretty good shape. Here, Bitcoin would rally 40%. Following this buy signal, this is the one that's probably the weakest of them, but it still was in profit. Following this buy signal, it rallied 12 to 13%. If you want to say, oh, well, it wasn't green until it's halfway through the candlestick, fine. Then it rallied 9%. Great. It's still a good signal. This buy signal came in over here. You probably would have entered this trade before this buy signal came in, but even if you waited until it came in, 27% rally. Buy signals on the daily chart, confirmed by trend catcher. Keep in mind, that's an important part. Confirmed by trend catcher and confirmed by other technical indicators. But even if you're just looking at those two, not a good strategy, but it's basic. Even if you only look at the buy signal and the trend catcher, when you see confirmation on buy signals on the daily chart, you're normally going to see a rally of at least 10 to 15%. You're probably also going to see the market rally to the take profit zone, and that's what we're looking at right now. Bitcoin's take profit zone is sitting up at 32 to $33,000. In fact, it's sitting at $31,000 to $34,000, but the center of it, about $32,000 to $33,000, is where I'm expecting Bitcoin will go. That's where Lux Algo is predicting. Lux Algo has done a very good job of indicating these things in the past. Now, speaking of Lux Algo, there's another important factor I want to point out here. We see confirmed buy signals on Lux Algos on the 3-daily chart as well, and they are arguably even more important. These are much less frequent, and when they do show up, they are typically very, very, very powerful. And yes, there can be some false signals. That's why you weed these out, weed those false signals out with other data. But if we look at the past, and we look at some of the past Lux Algo confirmed buy signals, we'll see on the 3-daily chart, they're very good. This buy signal right here came in May of 2020. From May of 2020, we saw the market rally until the next sell signal, 300+%. The next confirmed buy signal, and we're not including this one because this sell signal was never confirmed, so this is just a repeat of the first. The next confirmed buy signal that we saw happened right here. February the 3rd. Bitcoin would go on to rally 81%, or if you want to go to the next sell signal, whatever, you can do it that way, 56%. Moving on, we had a buy signal that was confirmed here. Actually, it was confirmed here in August. Bitcoin would go on to rally 34%. This confirmed buy signal was just a repeat of the first, so we can disregard that, and we can actually say that this confirmed buy signal rallied us all the way up to 74%. Just keep that in mind. This sell signal was never actually confirmed. Next buy signal, we did see one right here. It was confirmed, and then, yeah, Bitcoin did rally about 12%. Again, there's some confusion in here because Lux Algo being a trending indicator will get a little bit confused when you're moving sideways. Bitcoin moves sideways in an extreme way like that, you're going to have a difficult time with an indicator that can only say up or down if Bitcoin's not moving up or down, it's moving sideways. So you got to understand that no technical indicator is perfect. That's why you use a variety of technical analysis, and you use your noggin. You use your thinker. Use this thing, your brain. You got a big one. You probably do. I'm sure you're very smart. You got to use your brain. Don't just rely on technical indicators. They're tools. They're not replacements. A hammer is not a robot that's going to build a house for you. It is a hammer that is a tool that you, the builder, wield. Capiche? I think you understand. All right. Using Lux Algo here, we can also see that it gives us a 15% rally here on the 3-daily chart. The reason I'm showing you this is because we've just seen a signal, just so you know. I'm not just doing a sales pitch for Lux Algo, although you absolutely should buy it. I'm giving you a reason to understand why it's doing very well. We would see a rally here from January to April of 63% following the buy signal on the 3-daily chart. We have just seen a buy signal come in just a few days ago, just a few weeks ago, June 21st, 3-daily candlestick. We saw that confirm. Bitcoin's already up 9%. The price target, you're not going to believe it, is sitting with a center line at 40 grand. There are plenty of people predicting a $40,000 Bitcoin right now, and I'm going to be honest, I don't think that is a absurd prediction with how much bullishness Bitcoin is showing right now. I would like to be more conservative and set my first price prediction at $32,000 to $33,000. But look, if it breaches that, guys, 40K is very much in the cards because $32,935, call it basically $33,000, is one of the most important resistance levels that we currently inhabit. The point of me showing you all of these indicators is to show you that Bitcoin is very close to a major breakout, and the market sentiment and the appearance of strength from the bulls is indicating to us that a large rally is coming, and that large rally is coming relatively soon. So let's talk about when that might happen, and then let's talk about how to profit from that. Because, of course, guys, technical analysis is not just about understanding the markets in a theoretical sense. The point of technical analysis is not just to be a theoretical science where we understand things and then it's kind of useless understanding. I remember reading an article when I was in high school, and you guys know I don't go too much into politics, but I will talk about this. I think that the government is too large, and I think that the government puts itself in the position of God many times. And the government likes to spend money on strange things. And so I saw a article that was which was a United States government-funded research study, United States government-funded study, and it was to the tune of like $250,000 or $500,000. And the study was on what direction does a certain breed of dog face when it poops. That was the study, right? That was the study. Technical analysis is not like that study, because I'm going to be honest, you guys could correct me if I'm wrong. I see absolutely no practical implication for that research. Why do we need to know that? Doesn't matter. I could not care less. I'm going to be totally honest. I will never read that data because I don't care. Makes no difference to my life or anybody's life. There might be one person out there that matters to. I kind of doubt it. Poll. Who here needs to know that? No one, right? There's some science that you can do that just, there's no reason for it. Technical analysis is not a science that is purely theoretical. It's a science and it's an art that actually has value because it is actually practical. The reason that we're teaching you technical analysis is not just so you can say, I understand where Bitcoin's going. Now I can go show off to my friends. No, I'm not trying to give you an ego boost because you seem like you're really, because you sound smart, because you say, oh, well, this indicator said we're going up and that went up. I'm not trying to make you look more popular at the dinner table, although that may be a side effect. The reason that we're doing technical analysis is for practicality. So practically speaking, let's talk about when this rally may occur and what that rally may look like and how you could profit from it. Guys, if you're enjoying today's stream, make sure to hit that like button, smash that like button, hit the like button, hit the post notification bell, and also make sure to subscribe to the channel so you won't miss any more content here on the channel. All right, going back to the chart. When are we going to break out? Well, it is difficult to tell, and part of the reason it's difficult to tell is because we're kind of sitting in this area of it could be any day. Sure, Bitcoin could break to the downside. It's totally possible. Black Swan event could come in. Bitcoin could just lose its footing. It could trip. You know, I mean, even the best 100-yard or 100-meter dashers sometimes trip, right? Bitcoin could trip and fall. It's possible. The technical analysis is overwhelmingly bullish right now. I mean, go to CoinMarketCap. You see the fear and greed index is sitting at 61. That indicates that there's actually more room to run, but it also indicates bullishness. Indicates a breakout. If you see fear and greed between 50 and 70, let's say between 55 and 75, that indicates that you're in a rally and there's more to come. That's where we are right now. Same thing with the opposite. If you're at like 45 to 25, then you're probably looking for another drop because you're not bottomed out yet. Fear and greed normally goes from 0 to 100, normally goes all the way, or at least pretty close. On Bitcoin, we're pretty confident there's another rally coming. The question of timing is a difficult one because while we have indicators that tell us where Bitcoin will go and that Bitcoin is going, one of the most difficult pieces of technical analysis is ascertaining the question of when. And I'll explain why. The what, as in, will it be a breakout to the upside or to the downside? That's pretty easy to figure out. You look at the market sentiment, you look at the strength of the bulls and bears, you look at your indicators, look at how big you're buying your sell walls are. You look at how the historicity of the market. Have we just gone through a $15,000 rally? Probably not a lot more room in the tank to go higher. Have we rallied $6,000 and we normally rally 15? We're probably going to move to the upside. The what is pretty easy to ascertain. The how, or I suppose the where, of how far it'll go is also pretty easy to ascertain because there's different price targets you can get. The when is difficult unless you have something that's going to happen on a specific date, such as a halving, such as we know that BlackRock's going to get an answer on its ETF today. So the effective federal funds rate is going to come out a certain day. The Fed is going to make a decision a certain day. We're going to see a launch a certain day, whatever. That helps us with the win. There's not a whole lot of wins right now, as far as not W-I-N, but W-H-E-N. There's not a whole lot of win. There's not a whole lot of win right now because we don't have a lot of technical indicators that are about to flash in a certain day that are going to be bullish. What we do have is we do have on the daily chart MACD that's about to cross bearish, and we do have RSI that's about to move bearish. Those aren't things that are likely going to help us break to the upside, though. Nor do we have something like, let's say, an uptrend here that's just shoving us into our resistance anytime soon that's going to make it blatantly obvious that Bitcoin's about to break up. If we were to go by that data, then we'd probably be looking 3 weeks from now for Bitcoin to just continue through this very, very shallow ascending triangle pattern. If Bitcoin is not able to break out until then, fine. But what I can tell you on the win is that Bitcoin is probably going to break out this month. And I know that's not very satisfying. You're probably thinking, Jeb, oh man, I want something more than that. I want something more concrete than it's probably going to break out in July. Jeb, I want you to tell me that it's going to break out at 9:20 on the 4th of July so that I can see some fireworks outside my window and I can see some fireworks on my windows, right? That's what I want. Unfortunately, that I can't really give you that. That's just not possible with technical analysis, at least in theory. Sometimes there are certain things that will occur and we can say, boom, it's going to happen right here, and we have confidence in that. When we saw, for example, Jay Powell on, oh goodness, what day was it? It was last month. Month before last, May 10th was the meeting. I think it was May 10th. Maybe it was May 7th, whatever day it was. Whenever he had the meeting, 2 effective federal funds meetings back, and it was 2:30 in the afternoon. And it was about 2:50. It was 20 minutes into the press conference. And he said, we didn't put any language in there about we're having definitely another rate hike. And so everybody started thinking, oh my gosh, maybe there won't be another rate hike. Then boom, now we know we'll win. Jay Powell just said something super bullish and super FOMO there's a win. We're about to have a rally. Duh. We don't have any of that right now, at least to my knowledge, in crypto through technical or fundamental analysis. What I can tell you is a breakout's probably going to happen this week, and more than likely it's going to happen sooner than later. It's probably in the next week or two. But while you may be hankering, you might say, for a more concrete and definitive answer on when Bitcoin is going to break out, you might not like what I'm about to say, but I will say it anyway because I care about you. You don't really need it. You don't really need to know when it's going to break out. To know that it's going to happen, but you don't know exactly when, if that bothers you, then I would ask you, is there an impatient heart there? Are you impatient? Like, oh man, I want this to happen now because I'm in a long trade and I'm scared. And is there fear? Do you have fear that, oh, I'm in a long trade and I'm afraid I'm going to get liquidated? Is there fear because I need this trade to work to make rent? If you're in one of those positions, the Bitcoin market moving is not the problem. The problem is you need to become financially sovereign and not worry about rent. You need to not be in a trade where you're at risk of being liquidated if Bitcoin doesn't go up. You need to, there's a different problem there. If you're not able to sit back and be patient and say, all right, I'll wait 2 weeks, then something's going on in here. Not in here, not on your screen. Something is going on in here. And that's where we talk about financial sovereignty is not just an educational problem, an education issue. It is also an issue of the heart, and it's also an issue of the spirit. It's also an issue of character. We have to learn patience. We have to learn timeliness. We have to learn discipline. We have to learn all these things, consistency. We have to learn financial sovereignty. All of these different issues in the heart that will help you to become successful. So now that we kind of understand, it's probably going to happen in the next week or two. Might happen tomorrow. Might happen 3 days from now. Might happen 11 days from now. Now that we understand that it could happen anytime in the next month, but it will probably happen in the next week or two, then we can start figuring out, well, how do we be ready for whenever it breaks out? And the reason I say don't worry about when it breaks out, is because the plan doesn't change based on the when. The time that it happens doesn't change the plan. So let's talk about the plan. How do you profit from this? Simply put, guys, we have a very obvious level of resistance that if Bitcoin breaks with volume, boom, we're going into a rally. And with the amount of exuberance that we've had going into this ascending triangle pattern, it's probably going to be a big breakout. If you measure the flagpole right here, because this is a ascending triangle bull flag, to use the technical term, the breakout would give us a price target of $35,000. Lux Algo is also giving us a price target between $31,000 and $35,000. The 3-daily chart Lux Algo buy signal is giving us a price target of 40. So if we call that the conservative level in between about 32 to 33, and we give us an entry price around probably above this high, then, and this is a relatively conservative way of setting up this trade. You can be a little bit more risque on this if you want, but I'm going to set it up a little bit more conservatively because I do always have a concern that somebody's just going to copy paste my trade, and I'm not trying to set up a copy trade here. Nothing necessarily against copy trading, but that's not what I'm doing here. So I would give an entry price of probably around $31.50, $500. You could definitely enter before that, but I would probably enter right around there. Maybe a little bit lower. It depends on the volume. I'll explain in a minute. Give us a stop loss is pretty conservative. And then a price target, I'm going to say $32,750. And I'll explain the principle here. The idea here is not to use these exact numbers because these are not the exact numbers that I would probably use if I was doing this trade. The idea here is to give you an example of principles so you know how to go and do this trade on your own. It is not my dream to feed you for the rest of your life. It is my dream to teach you how to fish, and then you and I can come here as equals in understanding, and we can bounce ideas off of each other. It is not my dream to always be above you and always be your mentor and always be... It's my dream to educate you to the point where we both understand fully and we can have an educated conversation about this. That's my dream. It's not my dream to just give you a fish every time you come here and boom, here's a trade, boom, here's a trade, boom, here's a trade. Nothing necessarily wrong with that for a time. But same thing with my son. It's not my dream to make him dinner every night for the rest of his life, right? It's my job. For the next 15 years, sure, I'll make him dinner. At some point, when he gets of age and when he gets the right age, through the course of me making him food, I need to teach him how to do it for himself. It's my job as a parent to teach him how to be independent. It's my job as an educator for you to teach you how to be independent, and then we can come and have a conversation as equals. That's the dream of every parent. That's the dream of every teacher, to educate somebody and grow somebody to the point where they can converse as equals or at least close to it. If I start technical analysis before you, I might always be a little bit ahead of you. Maybe not, maybe so. With my son, I'll always be 22. I'll always be 20 years older than him. I'll always be a little bit ahead of him, but we'll kind of come closer together in understanding so we can have this more of a friendship relationship rather than just a teacher-student. And so that's really my dream. So don't just take this trade and go make it. If you want to do that, fine. I think you'll be okay. But take the principles, make some adjustments for yourself. Here are the principles of trading that we're going to apply here. First and foremost, we want to make sure we have a powerful risk-to-reward ratio. This is a relatively conservative risk-to-reward ratio, and the reason for that is because of the long stop loss. I might adjust that here in a second. In fact, I will just go ahead and do that right now. First principle of trading, you want to have a pretty good risk-to-reward ratio. This is at a 5 risk-to-reward ratio. Entry price, I put at 31,500. Exit price, I put at 31,250. Stop loss at 31,250. Exit price at 32,750. That gives a 5x risk-to-reward ratio. That means there's 5 times the price action change above in the take profit, then below. $250 compared to $1,250. It's a pretty good risk to reward ratio. Second principle of trading that we're going to apply here is that whenever you enter a trade, you want to see volume. When we saw these breakouts over here, we saw quite a lot of volume, as you can see here. These breakouts were confirmed with large volume candles. All 3 of these breakouts, this one, and this one, all 3 of them backed by volume. The best way I can explain volume, and we will explain this in Principles of Trading at some point in the future, the best way I can explain volume is like this. The Russians and the Ukrainians are having a war, and they are, unfortunately. The Russians come and they attack a part of the line where there's like one dude defending it, and he's sitting there drinking a Coke, and he doesn't even notice, and you have 100,000 Russians just zoom straight through that part of the front. Was that really a victory? I suppose they got more land, but was there really a conflict there? Was that really showing that the Ukrainian military as a whole was weak, or was it showing that they were weak in that one spot? You see my point? They found a weakness. Finding a weakness does not mean that the whole contingent is weak, right? That being said, if you have 100,000 Russians coming, there's 75,000 Ukrainians, and it's a hard battle, and they duke it out, and then the Russians end up winning, or the Ukrainians flip the script. I'm very much pro defense of their own territory, so don't think I'm on the Russian side, because I'm not. They're terrible. The Ukrainians come and they start fighting back. Same deal. And there's a giant battle of Kanai kind of things. 50,000 men on either side. There's a huge battle. Then you really know who's actually stronger. Then you actually have a better understanding of who's stronger. And yeah, maybe there was an encirclement or there was a tactical thing here, a tactical thing there. But in general, you know who's stronger because there was a lot of engagement. There's a lot of battle. It's the same thing with volume. When you see a breakout on very low volume, that's kind of like the Ruskies or the Ukrainians just running through a territory and there's one dude sitting there in his bunker drinking Coke and he's not paying attention. When you see a breakout on a lot of volume, it means there was a real battle. It means that they really went at it, and we really know who duked it out. It's like you got boxers in a ring, and they go 10 rounds, and they do that 10 times. You do that enough times, and you're going to know who's actually on top, because there was a lot of volume of fighting. If you play in chess, you got 2 people playing chess. They play 20 games. One comes out with 13 wins. You know that guy is the better chess player. He didn't just get lucky. If you have a lot of volume, the bulls didn't just get lucky. There's something going on here. When we look at the chart, if you break out on no volume, it's very possible they just got lucky. It's very possible the bears were just caught off guard. It's very possible the bears were extremely strong and the bulls just went around them. If you have a lot of volume, it shows that the bulls fought straight through them head on and still won. That does 2 things. Number 1, it confirms that the bulls are strong, or the bears on the flip side. And number 2, it also means that you weakened the bears. It also means that you used quite a lot of their troops, if you will, their reinforcements. They will have taken losses in that battle, which will make it easier for the bulls in the future. So a lot of volume is a very good thing. Very supportive thing for whatever faction sees it. So if Bitcoin breaks out on a lot of volume, this is our second principle of trading. First one was use a high risk to reward ratio, like 5, above 3 at least. Second principle of trading, trade a breakout on volume. Typically, you want to trade breakouts. If you're trading breakouts, you're typically going to do a lot better. You're going to have a lot more profit. Trade the breakout on volume. The breakout's above $31,000, although you could get tricked, and then you might have a little top here. Don't do this. Don't make this mistake. Let Bitcoin start hitting its head for a little bit and then break out. That's the kind of trade you really want to make if you can. Third principle of trading, use a tight stop loss. Here, I'm using a $250 tall stop loss. I probably wouldn't even recommend using this big of a stop loss. Again, this is just an example trade. I wouldn't necessarily use these exact numbers. Use a very tight stop loss. We use this as a principle of trading as well, where when you're making a trade, use a very tight stop loss at the beginning, and then as you've got more profit, you can use a bigger stop loss. If you were up $10 on a trade on Bitcoin, now if you're on Cardano, if you're up $10, then you're doing very well. But if you're up, let's say 0.1% on a trade, use a 0.001% stop loss or a 0.01% stop loss. Use a very, very, very small stop loss. Use like 10 to 20% of however much you're in profit as your stop loss. So if you're up 1%, have a 0.1% stop loss. Have a 0.2% stop loss. Keep it very conservative. If you're up 10%, use a 1% stop loss. Your stop loss can get bigger as your profit gets bigger. Use a very tight stop loss in the beginning so you don't get stopped out. So that you might get stopped out, but so that you don't end up losing a lot of money. It's better to get stopped out and lose 0.1% 3 times. I can count 3 times and then get into a trade with a tight stop loss, and then boom, it rallies and you make 10%, and then who cares that you lost 0.1% in the trading fee? You see what I mean? You want to stop yourself from these big 5, 10, 15% losses. There's no reason to ever lose 15% on a trade. Ever. Ever. It'll happen with investments because you don't have stop losses with investments. There's no reason to ever lose 5, 10, 15% on a trade. Ever, ever, ever. Don't do it. There's no reason. Don't do that to yourself. Just don't do that. Take winning trades. If you do it right, you can pretty much get a winning trade every time. You just might end up making a lot less trades. Use the principles of technical trading. You're going to be so much better at trading. Next principle of trading. You can ladder out. So a couple of things to keep in mind here. There's more than just one level that Bitcoin's probably going to test here. 32K is going to be a big level. 32.5, whatever. Don't just make it as simple as saying, I'm going to exit my whole position here. You can do that, and there's nothing wrong with that, and a lot of times you will do that. But you can also exit 50% of your trade here, 25% of your trade here, 25% of your trade here. You can also exit 50% of your trade, exit 25% of your trade, figure out if you can on an exchange. I don't even know if you can do this, but deleverage the trade. You let the rest of it stay in your investment portfolio. If you are on no leverage, which if you're a beginner, I would recommend as you learn the principles of trading. Leverage is a fine thing. It is a form of debt, so be very careful. The debt is the slave to the debt holder. Don't forget that. That's important. I think it can be a useful tool if you are experienced enough to use it. You can roll over some of the profits into your investment portfolio. You might say, "Oh man, that was a good entry. 30K. I don't know if we're ever going back down there. I'm going to hold on to some of that for the long term because I want a 30K entry on my investment portfolio." Those are just 4 principles of trading that I think you can apply here. The resistance levels to look for are $32,000 to $33,000. The breakout levels are between 31 and 31.5. Use those principles of trading wisely, and I think you can make some money here. 5th principle of trading I'll give you: use alerts before you use automatic trades. It's okay to have an automatic trade, but if you have an automatic trade, set it up so dang conservatively because it's possible it's going to trigger in the middle of the night and you're not even going to know what happened. You don't want to set up an automatic trade with no stop loss where you're going to set up the trade and then went into it, you're on 5x leverage, down 5%, lost 25%. You wake up and you're like, crap, why did I do that? I don't know why I did that. Use alerts before you use automatic trades. You can do that on TradingView even. Go to your chart, boom, alert, Bitcoin USD crossing price 31,250 only once. Expiration, set it 20 years in the future, whatever. Message, and then I'm not going to click that. Well, I'll click this to see if it has anything here. Yep, I can show this. Boom. Notify an app, provide show pop-up, send email, webhook URL, play sound, send email to SMS. It'll text you. TradingView will literally text you when it breaks a certain level if you set that up. And then you just say, go on this app. Boom. It might be too late, so that's why an automatic trade is a good backup, but just be careful with them. You can get yourself into a pickle using an automatic trade. So, and better yet, just kind of watch the market to see if it breaks above a very conservative level where it might be gearing up for a breakout. It's going to happen in 10 minutes. Then you have time to set up the trade. So with all those principles of trading, I think you'll be in a position to make some good money here. And again, leverage is not evil. Leverage is not from the devil. Leverage is not horrible. Okay, leverage is dangerous. All right, leverage is dangerous, right? Cars are dangerous. Planes can be dangerous. Boats can be dangerous. Trains can be dangerous. Pencils can be dangerous. We still use them sometimes. Leverage, I would say, is more dangerous than all of those things, though. So keep that in mind. Won't kill you, as some of those things can, but it is more likely to hurt you than those things I just listed are. Be careful with it. It is a tool. It's like a very sharp knife, and you're cutting potatoes, or you're cutting and you're dicing something. Don't cut your finger off, but it can be useful. All right. Let's go ahead and read some chat. Really appreciate all of you guys in chat. Everybody's asking about Gary Gensler. To my knowledge, that is a rumor at the moment. It very well may happen, but I'm going to wait for some more concrete information. What's the best strategy to buying a whole Bitcoin at this point in the market? That entirely depends on your financial position, Chris Anderson. That's a great question, though. If you're trying to buy a whole Bitcoin, obviously there's 2 ways you can buy a Bitcoin. You can buy it in pieces or you can buy the whole thing. If you've got a $3 million net worth and you want to put 1% of your net worth into Bitcoin, just go buy a coin all out because you got the money to do it. If you've got a $30,000 net worth, you don't want to put your whole net worth into Bitcoin. I would recommend keeping your net worth in crypto, 10 to 15% at most. I would recommend having a diversified portfolio where you're not just in crypto, having money in real estate. Obviously we're real estate investors because we own a house. I mean, most people don't look at it that way, but if you buy a house, you are a real estate investor. That's how most people build their retirement. They are a real estate investor, right? Have money in mutual funds, in individual stocks if you want to be risky and you know what you're doing. Have diversification. But if you're trying to buy a whole Bitcoin and you're not a millionaire, I would recommend buying it dollar cost average style. Set up a way of saying, I'm going to buy $100 worth of Bitcoin every Friday. I'm going to buy 0.1 Bitcoin every third month, third Friday, whatever it is. And put it as a budget, put it in your line item, in your budget. We're going to talk about budgeting a lot on this channel. When you have your budget, your monthly budget, you should have, and like I said, we're going to talk about this more in the future, but you should have your fixed expenses and your discretionary expenses. Your discretionary expenses should be broken down into 3 categories: your wants, your needs, and your generosity. Don't forget that one. That one's important too. And don't go overboard on that one, because the other 2 are important also. You can spend your money on things you enjoy, and you should spend your money on things that you are investing in, and that's a good idea, and you should give money away in a very wise way, but you should be generous. In that investment category, what I do in our budget is I have it broken up where a certain amount of our discretionary income, whatever it comes to, income minus fixed expenses becomes our discretionary income. A certain amount of the discretionary income gets allocated to our investment column. Inside the investment column, a certain amount of it gets allocated into different places. For us, we're trying to pay off our house, and for us, we're also trying to invest in some mutual funds, and then we're also trying to put some money just into extra savings. We've got a bunch of savings. We've got the right amount of savings, not too much, not too little, but we want to put a little bit more in there, because every once in a while you got to dip into savings, right? Even if you have your 6 months of savings, or 6, 9, 12 months, whatever you want, I'd go for 6 months, 6 to 9 months. You still want to replenish it every month, because you never know when you're going to need to dip into the emergency fund. You need to have a line item in there to replenish it. Keep it in a 4% APR or savings account, and then make yourself a few $100 a month. In that line item, in your investments, have a line item for mutual funds, for maybe saving for a rental property if you're trying to get into that, and have a line item for cryptocurrency. The line item for cryptocurrency for us right now, it's not there, because I have as much money in crypto right now as I want, and I don't see an investment opportunity that I want to take. That might change next month, but right now, that's where it is. A lot of our money in that line item is going to paying off our house, is going to investing in mutual funds. That's what we're going to be working on right now. So set up your budget. Again, just running through it very quickly. Income minus fixed expenses. That's your insurances. That's your rent or your mortgage. That's a car payment if you've got it. That's a doctor grocery bill, internet if you consider that unnecessary. Get your fixed income, then you have your discretionary income minus fixed expenses, needs I call them, is your discretionary budget. Split the discretionary budget up into those 3: want, need, generosity, based on a split, maybe 35 wants, 50% investment, 15% generosity, whatever it is. If you've got a $2,000 discretionary budget, then you would have $1,000 going to investments, $700 going to generosity, and you'd have $300 going towards generosity, $700 towards wants. It's your date budget. That's your you're going to Disney budget, that's your trips budget, whatever. In the investment budget, let's say you got $1,000 in there. 50% of it goes into your house, 25% of it goes into savings, and 25% of it goes into crypto. Whatever it is, set it up like that. You're gonna be very happy that you did that. Some people are saying mine it. That's also a good option if you can find a way to mine it profitably. That is a more complicated strategy, but if you want to do that, you definitely can. Buying a whole Bitcoin is something that you have to do a little bit at a time. It's like eating an elephant. You got to take it one bite at a time. All right. Really appreciate all of you guys tuning in. Thank you guys so very much for all of that. Queen is in chat. Cicero said, cheers from Brazil. Ferreira? Maybe that's how I say it. I don't know. You'll have to tell me. Greetings from Cambodia, bro. What's up from Cambodia? Shout out to Cambodia. I just saw there I have a $1,000 Bitcoin miner for sale now. Mike Lowry said, happy 4th. Guys, I am going to have to wrap it out. Before I go, make sure that you hit that like button, subscribe to the channel, hit the post notification bell, and don't forget to sign up for Lux Algo using coupon code JEB, that's JEBB, for 30% off at checkout. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real